folks, we got to talk about real estate. I've been talking about this a little bit on the channel recently. I think it's one of the most important things to pay attention to in the overall economy over the next, I would call it 6 to 9 months, and what transpires here, what doesn't transpire here. And here today, I wanted to react to this video that got shared inside the private group by Brian here today. And I thought it was worth basically, reacting to this video and kind of giving my opinion on this. And this gentleman, which I've never seen his channel before, but he makes some interesting points throughout this video that I think are worth addressing, right? And a lot of people, they just say like, oh, real estate's going to crash or real estate's too high, but they don't go into any details around that. This gentleman actually went into details here, and so I appreciate that. So we're going to watch this together, give my opinion on this. Hope you guys enjoyed it. As always, let me know if you enjoy a reaction video like this and me bringing some interesting content to your guys' plate that is something off the channel. So I appreciate you guys joining me as always. And if you're looking to sign up for FTX, my crypto partner, check out the pinned comment down there. Alrighty, guys, let's get
America are in deep trouble in 2022. That's because they are building a near record amount of homes right now, just as interest and mortgage rates are surging. This combination is inevitably going to lead to a wave, a deluge of canceled contracts from home buyers on new homes, and that is going to send the housing market into a crash, and it's going to mean that these home builders, particularly the big ones, are going to suffer.
By the way, all those home builders he just showed you there, they're all pretty much at 52-week lows right now. Like as far as all those are public companies, and if you look at their stock price, they're all pretty much at 52-week lows, which is interesting because we're at a moment where real estate's red hot. The numbers have been extraordinary. These companies have been reporting, and here we are with all the stocks at 52-week lows. So it's like, who's smarter? Is it maybe the home builders, or is it Wall Street, right? Like that's where you get into this situation. Like, who's right in this scenario?
Huge losses. And I don't think people really understand just how many homes are being built across America right now. This data from the US Census Bureau shows that right now in 2022, there's nearly 800,000 single-family homes actively under construction. That's 40% higher than the long-term historical average of 550,000, which you can see by this yellow.
It's interesting, even with this massive housing boom we're kind of on right now and all the excitement in real estate, it's interesting that we're still not to the levels we were around 2005, 2006. It's just like crazy to think about with all this excitement, with the bigger population than ever before, and all the money that's obviously been pumped in the system. It's just crazy to think we're still not even back to those sorts of numbers.
Dotted line, and it's now nearing the level.
And this is where it's very conflicting, because you're looking at these numbers, right? And you're saying, oh my gosh, we're definitely getting up there as far as how many homes we're building.
That we
but
saw
what's interesting is most people feel we're not building actually nearly enough homes right now, because we've underbuilt for over a decade now, essentially, of how many homes you should usually build, which is just another reason why rents have skyrocketed. So this is where you get into this catch-22s across the board, and it gets messy.
Previous housing bubble in 2005, 2006. And so it's really important for you all to understand, if you want to get a sense for this housing market in 2022 and how the crash is going to play out, you got to understand that home builders are going nuts right now. You just saw the data. A near record amount of homes are under construction, particularly in certain parts of America. We're seeing a massive surge in building. And later in this video, I'm going to tell you the cities where we're going to see the most canceled home building contracts and the most turmoil and the biggest crash. But before we get into that, everyone, we need to discuss the status of these nearly 800,000 homes being built in America. Are these homes that have actually already been purchased by someone? Has someone already put a deposit down and is just going to be the rightful owner when it's delivered? Or are these homes being built without a buyer, aka are they being built on spec? And based on my analysis of this US Census Bureau data that goes back 4 or 5 decades, everyone, this is one of the longest running data sets to understand home building in the housing market. It looks like about 500,000 of the homes under construction have already been purchased, while 270,000 are being built on spec, aka they don't have a buyer yet. Now,
it's actually been really attractive recently for the home builders to build on spec, especially recently, let's call it over the past year. And the reason being is, let's say it takes, it depends on the house you're building, but it's usually taking at least 9 months to build a home right now, okay, from the time you start the process to actually get it finished, right? But a lot of homes are a year to anywhere from 12 to 18 months. But when you're in a fastly appreciating real estate market, right? And let's say you're a home builder, it makes sense to kind of build more homes for yourself rather than for necessarily customers, just for the mere fact that you know you're likely going to be able to sell it for far more money in 12 months from now than you're able to sell it for now. And that's what you kind of get into in a hot housing market, right? And so if you're a home builder, it's like, why do we want to sell at today's prices? The market's going crazy. Let's sell at tomorrow's prices instead. And so, and also I've seen it where some home builders are holding back certain amount of lots because they're seeing the appreciation. Like, why sell this lot today at $200,000 when at the rate of increase we could sell it in 6 months from now for, let's say $250,000, $275,000, right? And so it's like all things in the money game. It starts to get into a little bit of greed, and that definitely happens, right?
Blush, this might be discouraging to potential home buyers and real estate investors out there to see that nearly 2/3 of the 770,000 homes under construction have already been purchased. But here's what they're not telling you, everyone, and that's that many of the homes that have already been purchased and that are under construction are going to be available for you to buy very, very soon. And that's because a lot of buyers are about to cancel their contracts.
So this is where he makes a very, very large statement. This is one of many reasons I wanted to react to this video, because this is a different sentiment than you've heard out there. Obviously people talk about this could happen, that could happen. But when you make a statement like you're expecting mass cancellations of contracts, that's a very large statement there, okay?
En masse. We're about to see a wave of buyer contract cancellations on these homes that are under construction. And let me give you an example of this so you can see just how crazy these cost increases are for these buyers who have gone under contract. Take a look at this example of a new build home in Austin that's on the market from a builder for $561,000. Now, if you would have put a deposit down for this home, say 3 or 4 months ago, your interest rate would have been around 3%, which means that your estimated monthly cost, according to Zillow, would be about $3,500 a month to own this home if you had put a deposit down 3 or 4 months ago in late 2021, early 2022. But now fast forward to today, and with the mortgage rate up to 4.8%, your monthly cost is now over $4,000 a month. Now,
it's about a $600 difference there, and that's the sort of difference that for many home buyers just that's it. They can't afford it then at that point, because a lot of people run it up pretty darn close. Not a lot of people do a lot of wiggle room, right? They make an X amount of money, right, which is usually pretty consistent, and they structure their mortgage so usually they're cutting it real close, or maybe there's just a teeny bit of wiggle room. If you talk about a $600 increase a month, that could be the difference between that person not being able to afford that home now, right? So this is very important.
Mortgage rates keep going up, and we get to a 5.5% 30-year fixed rate in the next month or two, which I think is very realistic given the Federal Reserve's plan to increase interest rates. Well, then the cost to own this home would go up to $4,200 a month. Wow, folks, that is crazy that in this hypothetical example in Austin, which is representative, I think, of what many people are experiencing who are buying homes right now, this is something that's going to devastate the home building industry and housing market. Because number one, a lot of people are not going to want to buy the home when it's delivered, given how much the cost of ownership's gone up. But then number two, a lot of people will not be able to qualify for the mortgage to purchase the home when the home is delivered. And the way to think about this, folks, is almost kind of like a battle, a war between the home builders and then banks and mortgage lenders. Because the home builders on one hand are saying to themselves, like, we have so much demand to buy homes right now, we can increase the price, we can take a long time to deliver these homes because of materials delays, and it doesn't matter. But then on the bank and mortgage lender side of the equation, they're thinking to themselves, well, wait a minute, no, this does matter because I pre-approved this person at a 3% mortgage rate to buy this house, but now that the mortgage rate's 5%, I can't approve this person for the loan. And it's really this battle, this collision between home builders and banks and mortgage lenders that's going to explode in the next several months and lead.
And that's why you can't find a buyer for the home builder stocks right now. You're looking at Toll and Lennar and Pulte and KB and all these guys. You can't find buyers for these. Century Communities, you can't find buyers for these stocks right now, despite the housing market being incredibly strong, just because they're looking at this and they're like, It's great now, but just wait for 3, 6, 9 months down the road, right?
This wave of canceled contracts. And as I promised you before, now we're going to look at the cities in the metro areas that are most exposed to this cancellation risk, this cancellation of home building contracts that's going to increase inventory and leave home builders devastated. Pay attention to the areas in yellow on this map, as they're the ones that are seeing the biggest increase in single-family permitting and home building. And I think they're going to see the biggest increase in cancellations and basically too many homes being built and delivered to the market. There's a big cluster of risk in the southeast. A metro like Atlanta has seen an increase.
Let me say this real quick, because this needs to be said, okay? Let's imagine we're in a scenario where this plays out this way, right? And a bunch of people cancel homes, right? And home builders stop building homes. Well, that's not great for the rental market at the same time, right? Because let's imagine you canceled, a home you were building or something like that. Well, shoot, now you got to stay in that apartment. You got to stay in that other place you were staying, right? And so you don't move from that, which means there's even more demand for that rental, right? Which you get into this kind of bad cycle of like, we kind of need to build more and more homes, but if there's any sort of, short-term devastation here in the housing market, that's also not great for the rental market either, which is where people are getting absolutely destroyed right now. People are seeing their rents go up 20%, 30%, 40% in different markets. And, if people are just canceling contracts and staying put in those apartments or whatever, right, or rental houses, you're in even a worse kind of situation when it comes to that, right? So this is why it's very, very complicated. You can get on a lot of like catch-22 situations when it comes down to all this, right? It doesn't work perfectly. I know a lot of folks like to say, this is great if this certain thing plays out. Be careful what you wish for, because you might just get it. My dad used to always tell me that. Be careful what you wish for, because you might just get it. And if you're wishing for certain things to happen, just understand there's a lot of indirect and direct things that can happen very negatively that can hurt many various other things.
5,000 single-family homes being permitted since the pandemic. That's a big warning sign, as in a place like Nashville, Greenville, South Carolina, Charlotte, North Carolina, Columbia, South Carolina, Myrtle Beach, and then Raleigh, North Carolina are all places where we could have a big increase in cancellations. Additionally,
all those are pretty much, population centers where people are moving to right now. And the other ones he shares with you here, they're all places that a lot of people are moving to from back east, from up in the north, that are moving to the warmer climates, to the, places that things are happening, things are newer, places that are growing, right, that are exciting.
Florida is massively at risk in terms of this situation, particularly Central Florida and Southwest Florida. Orlando, Lakeland, Tampa, Northport, Cape Coral, we've seen a big increase in single-family permitting. Like, take a look at Cape Coral, more than double the amount of units permitted since before the pandemic. So we have builders working feverishly in these areas to fill orders, but what's going to happen when all of a sudden people cancel the contracts? Additionally, massive risk in Texas, particularly Dallas and Houston, where there's been an increase in over 12,000 single-family homes being permitted and built from pre-pandemic levels, as well as Austin and San Antonio, where we've also...
Austin's a market that has seen the rent just go up in the past year 40%. 40% in 2021, right? And so that's a market that a lot of people say, so many people are moving out that you've got to keep building. Well, if you stop building, oh boy, okay, that's not a great situation for the housing situation that's already what a lot of people feel like the supply and demand's way out of whack as it is there. If you stop building, you could end up even in a worse situation, right? And so these are things to consider here.
In very big relative increases. And then finally, we have this cluster in the southwest portion of the U.S. Phoenix, Tucson, Las Vegas, and Los Angeles have all seen a big increase in single-family home permitting. Lots of homes under contract that are currently being built in these areas in the Southwest, so watch out for cancellations here. But here's the crazy thing, folks. So far, we've only really talked about cancellations of homes being built that have already been purchased. But there's a whole other segment of homes being built, the ones that are on spec, which I addressed before, about 270,000 that are being built with no home buyer right now. And you can get a sense of the massive surge in spec building by looking at this graph, which is, again, data from the U.S. Census Bureau, telling us how many homes are currently for sale that are actively under construction. And you can see that we are at 260,000 right now in 2022 homes under construction that don't have a buyer. That's way above the long-term average going back 40 years of 170.
It's interesting. So we're kind of in the level of 2003, 2004 right now, which is intriguing.
And once again, we're starting to get close to the levels that we were at in the mid 2000s in terms of the amount of spec building going on, aka home builders building homes feverishly right now because they think they're going to have a buyer for it when it's completed. But once again, given the massive surge in mortgage rates we've seen across America over the last 3 months and the continued increase we're likely to see over the next several months, when these spec homes get delivered, I don't necessarily think there will be a buyer. And this is a risk that maybe the home builders aren't telling you. If you go to buy a home, they're making it seem like, the demand's going to be good forever. But if you actually look at what these home builders say in their SEC filings to their investors.
I will say from the real estate investment standpoint, I definitely have noticed over the past, let's call it 3 to 6 months, a lot of folks not as intrigued to buy real estate investment properties recently, including myself. This is not a year I'm buying real estate. Like 2022, I've said this from, before we went into 2022. I'm like, I'm not buying any real estate in 2022. It's just not something I'm even considering this year with how elevated prices have gotten. It's gone insane, right? And so I'm one of those that's just like, I'm not touching that. And a lot of people I know that are real estate investors are like, I'm not looking at single family right now. I know at least probably 10 to 15 people in real life that own real estate investment properties. And I don't know one that's like happy to go out there and buy, at least people that have been real estate investment buyers for many, many years and own several properties. I don't know one that's out there like, I got to go get a new property, got to get this property. I don't know anybody like that right now. And so we're in a kind of a situation in the market here where that real estate investment buyer that you had maybe buying 3 homes, 5 homes, 7 homes in 2020 and 2021, a lot of those folks have slowly started to say, you know what, I'm going to chill on all this buying right now because things are getting awful frothy.
See that they're very well aware of this risk. For instance, take a look at this snippet from the D.R. Horton annual 10K filing. This is one of the largest home builders in America, D.R. Horton. Look at what they told their investors in their 2021 annual report filing. Mortgage rates are currently low compared to most historical periods. However, market conditions could change, causing mortgage...
The section he's showing you there, that's called risk factor section of like a 10K. And so this is a section that's always designed to scare you essentially as an investor and kind of tell you about all the risks. So I just want, I think if you've never read a 10K and you're not familiar with this type of reporting, like you might see something like that and it sounds really, really super scary. That's this entire section's point, is to try to scare you and to try to explain all the risks. And this could go wrong, and this could go wrong, and this could go wrong, okay?
To rise in the future. And then here's the key point, folks, to pay attention to. When interest rates increase, the cost of owning a home increases, which will likely reduce the number of potential home buyers who can obtain mortgage financing, and thus could result in a decline in the demand for our homes. There you have it, folks. D.R. Horton, the largest home builder in America, is telling its investors to be wary of what's going to happen when mortgage and interest rates increase. You should probably pay attention to that. You should,
as they should. Every home builder should say that. And I think, if we're talking about something that should be taught in high school for mandatory, like financial related classes, like that is something that should be told out there. Like generally speaking, if mortgage rates go up a bunch, that's not the best situation for the housing market.
So pay attention to this. D.R. Horton goes on to say, our sales contracts require an earnest money deposit, aka if someone wants to purchase a home before it's built, they have to put a deposit down, typically 2 to 3%. The thing about it is that the contracts include a financing contingency, which permits customers to cancel and receive a refund of their deposit if they cannot obtain mortgage financing at prevailing or specified interest rate.
First off, I think it is worth addressing that different home builders have different contracts. Okay, let's put it that way. And if you ever read through those contracts, they're different in different ways. And some, maybe it is easy to get that money back. Others, good luck. Okay, good luck is all I'll say about that. And also, usually if you do any upgrades on a home, which let's be honest, most people do some upgrades, you have to put deposits down for those upgrades you do. And usually that's money that's non-negotiable. You don't get that money back, okay? So if you upgraded the countertops and the floors and this and that, which most people do, like not a lot of people just go in and build like the most base bone house you can possibly build. When you do that, essentially, usually that you're not getting that money back. So it's more of an incentive to continue that finished product, right? Which is what home builders want. They don't want to build a house and then you'd be like, I don't want the house or something like that. It's obviously not a good situation.
So in case some of you were skeptical or wondering how people could back out of their contract to purchase a home that's currently under construction, well, D.R. Horton just told you, typically their contracts have a financing clause which says if you can't obtain a mortgage by the time the home is built, you can get your deposit back and cancel the contract. This is especially problematic for home builders in the housing market when you consider the fact that nearly 95% of all newly built homes are purchased using a mortgage. You heard that right, folks. According to the U.S. Census Bureau in 2021, 94% of all newly built home sales in America were financed with a mortgage. That means only 6% were all cash transactions. That means that the newly built home sale market in America is ridiculously exposed to what happens with mortgage rates. And as we continue
to be fair, to that point, think about this logically for a minute. If anybody that has a brain out there, right? To have bought a home when mortgage rates were at the lowest levels we've ever seen and be able to get a 30-year at 2.8% or 3%, you would have to be insane, like literally insane, to pay all cash for that. Like, it doesn't make sense at all. When you're talking about you can get money that easy, like the return on average you can get from the stock market just buying an index fund is around 8% a year, right? So let's say you're buying a $500,000 house, to buy that house cash makes 0% sense, like 0% sense when interest rates are that low. Now, if all mortgage rates at 7%, 9%, totally different scenario. Totally different scenario, because then you got to start considering, okay, I can risk my money in the stock market. I can just buy this cash. Let me just buy this cash, right? And so I just do want to, say that there. But also it is important to remember most people that buy a home, the majority cannot afford to buy that home outright, right, in cash, so they have to get a mortgage.
Mortgage rates rise, you're going to see more of these release clauses in these contracts triggered, and people cancel the contracts and walk away from the homes as they're delivered. This is going to send an unexpected deluge of new home inventory onto the market, which is going to destabilize the local markets in many of the metros that we talked about earlier, those areas in yellow on the map where we saw the biggest increases in single-family home permitting. These are going to be the ones that have the biggest deluge of unexpected inventory, and I think as well as reduced home prices over the next 6 months. Now, of course, no one can 100% predict what's going to happen with monetary policy and how much the Fed's going to raise interest rates, because that's going to have a big impact on this equation. However, given the guidance that Jerome Powell, the head of the Federal Reserve, is giving right now, we're going to see a lot more monetary tightening over the next 6 months, and that's going to, as I said earlier, push mortgage rates up further. And I think kind of that threshold of where lots of people are going to cancel their contracts for new homes is going to be around the 5.5% 30-year fixed mortgage rate. We're at 4.8% today. I think when we see 5.5%, that's when the game is over for a lot of these housing markets in the Southeast, in Florida, in Texas, in the Southwest. And let me know in the comments below if you're somebody who's going through this right now, if you're under
So, let me give my finishing thoughts on this, okay? So first off, I don't think it's out of the realm of possibility at all to imagine that housing really starts to slow in the back half of this year, and I've said that many times, and I expect that to play out that way, where housing's going to definitely slow down in a major way in the back half of this year. And you'll likely start to see it in summertime, in my opinion at least, where, the home builders are going to say, hey, as far as new orders coming in, it's not quite there. So that's my personal opinion on the way I see it kind of playing out. Now, with that being said, that's a whole different scenario than what this gentleman is talking about here. This gentleman is basically making an argument that people are going to cancel contracts en masse, okay? I think that's a potential that some people cancel contracts, but I don't think we're up to those levels quite yet. Now, interest rates go to 6%. Yeah, we could definitely talk about where we're getting to some of those sorts of levels where people are going to definitely consider that. But you got to understand that there's a lot of homes being delivered right now that will be delivered over the coming months. I think the more negative effect you'll see is from new buyers, looking and they're like, shoot, man, mortgage rate, let's say is 5.7%, you know, in a month from now or a couple months from now. Shoot, 5.7% mortgage rate. These homes are already super expensive. I can't afford this, so I'm not even going to order that home, right? I'm not going to buy that Toll Brothers home or that Pulte home or that KB or that DR Horton or whatever, right? That's where I think it's going to affect much more than this canceled contract scenario where, you know, everybody just cancels their homes or something like that. I think that's a little bit of I'd call it a more out there idea that you would see, you know, 30%, 50% of these contracts just be canceled. I don't think that's happening at all. I think that would be a much smaller percentage. I think it's more about these new home orders that could start coming in the summer being not quite there and being like, wow, demands are really drying up there. So that's my personal opinion. Love to hear your guys' perspective in that comment section, as always, around housing, real estate. Do you think we're setting up for a crash? What's your guys' opinion on that? I hope you enjoyed me sharing this gentleman's video. Thank you for him for doing this video. I thought it was worth it, obviously covering. There's certain videos on YouTube that sometimes are just, I think, intriguing enough that I got to share it with my audience as well. And this was definitely one of those videos. So I appreciate you, man. I don't personally know you, but awesome for doing that video. And also FTX, my official crypto partner. If you want to check that out, check out pinned comment down there. Look at that. Trade $10 worth of free crypto and get a free coin. Doesn't get better than that. Much love and have a great day.